Welcome back to the Digital Asset Report. And you know what else is back? Bitcoin. Back over 100K, Bitcoin has returned to a cruising altitude above 104,000 today. The price surged more than 4%, which was the first time since January. And this is the third time in history that Bitcoin has passed the six-figure mark. Bitcoin's market dominance also surged past 60%, signaling strong investor confidence. Altcoins saw the love too, as over $235 million was added to the total cryptocurrency market cap today. Analysts are pointing to several key factors behind the move, those being falling bond yields, a weaker US dollar, and a steady wave of institutional dollars flowing into the Bitcoin ETFs. In fact, over $1.8 billion flowed into these funds in the last week alone, and there's always the political angle. President Trump hinted at a possible trade deal with the UK on Truth Social, which some say is adding to the market optimism. Bitcoin isn't just moving in price, it's moving the conversation. And nowhere was that more clear than in Washington this week. U.S. Treasury Secretary Scott Bessent spoke at the House Financial Services hearing on May 7th, and in response to a question about staying ahead of China in digital asset innovation, Bessent said the U.S. should be the premier destination for digital assets. He called for good market structure and stablecoin legislation to help secure that position.
Our goal is to encourage firms to reshore, bring back to the United States best practices that are digital asset innovation and experimentation here in the United States without scaling back their ambition to influence the global industry. The administration's efforts to promote clear regulatory frameworks for digital assets will contribute to this goal. So will ongoing efforts to promote fair access, interoperability of payment technologies across all borders. We will continue to support private sector solutions and discourage public sector solutions that distort markets and stifle competition.
Bessent's support aligns with President Trump's push to help make America the crypto capital of the world. He also confirmed he opposes a government-issued central bank digital currency, and he plays a key role in the administration's crypto strategy. But not everyone in DC is on board. Just one day after Bessent's comments, Senate Democrats voted down a key procedural motion to advance the GOP-led stablecoin bill. All Democrats and 3 Republicans blocked the effort, which needed 60 votes to move forward. That included Senators Rand Paul and Josh Hawley, who said they hadn't had time to review the latest version of the bill. The legislation aimed to create the first U.S. framework for regulating stablecoins with some bipartisan support early on. But recent changes to the text sparked concern. Senator Warren called it dangerous, saying that it puts national security at risk and opens the door to corruption. Still, some pro-crypto Democrats like Senator Mark Warner said they're committed to getting it right and want more time to improve the bill. Meanwhile, crypto entrepreneurs are pushing ahead, especially those with ties to the Trump administration. David Bailey, a Bitcoin advisor to Trump and the CEO of BTC Inc., has raised $300 million to launch a new Bitcoin investment company called Nakamoto. The company plans to go public this summer by merging with an existing NASDAQ-listed firm. With $200 million in equity and $100 million in debt, Nakamoto will acquire global businesses and invest Bitcoin into them. It's part of a broader wave of Bitcoin-native firms going public, similar to Jack Mallers' company 21, backed by SoftBank and Tether. And finally, bank regulators are beginning to show more flexibility when it comes to crypto. The OCC this week clarified that national banks it supervises can hold cryptocurrencies for their customers. This reverses an old rule that required banks to get special permission before doing anything with digital assets. It also follows similar moves from the Fed and the FDIC, which recently withdrew past warnings about crypto risks.
This digitalization of financial services is not a trend. It is a transformation. Here at the Office of the Comptroller of the Currency, we confirm that national banks and federal savings associations may engage in certain cryptocurrency activities responsibly in order to serve their customers.
Still, the picture isn't completely clear. One older Fed policy from 2023 remains in place, which says it's unsafe for banks to hold crypto. That's causing some confusion, and groups like the Blockchain Association are now pushing for that language to be updated. So where does that leave us? Bitcoin is rallying, the White House is leaning pro-crypto, and banks are cautiously re-engaging. The regulatory landscape is changing fast. With Congress debating stablecoin rules and a new wave of Bitcoin-native firms entering public markets, the next few months could shape the future of digital assets in the US. That's it for today. Thanks for watching. If you enjoyed this video, be sure to give us a like and a follow and head over to bitgo.com to learn more.